Seniors across California once felt proud owning homes surrounded by trees, hills, and the natural beauty that made the state famous. These were places they dreamed of retiring to: peaceful communities, beautiful scenery, and a chance to enjoy life after decades of working, saving, and sacrificing. But those same areas are now carrying a terrifying label: high-risk fire zones. And with that label comes a wave of new costs that keep rising faster than any senior living on a fixed income can manage. Insurance used to be the protection homeowners could count on to keep their property safe from disaster. But in fire risk regions across California, that protection is disappearing. Seniors open their mail expecting the standard annual renewal only to find a cancellation notice inside. No reason beyond elevated wildfire risk. No local support. Nothing but panic. When insurance companies pull out of a community, every homeowner is left stranded without protection on their most valuable asset. Many seniors are realizing they cannot get another private insurer at any price. And those who do manage to find replacement coverage discover costs that are multiple times higher than before. Even those who maintain coverage are shocked by how quickly premiums climb. People who paid $2,000 or $3,000 a year suddenly see numbers like $6,000, $10,000, even more. Insurance that once offered comfort now drains savings faster than retirees can replace them. These aren't mansions or vacation estates. These are family homes, built in the 1970s or 1980s, now becoming too expensive to protect. That creates a frightening situation: pay the inflated premiums or risk losing everything with a single spark carried by the wind. And when a home sits in a fire zone, banks get nervous. Mortgage lenders often require full coverage. Seniors who still have a loan could be forced into state-assigned insurance programs with extremely high premiums and almost no coverage protections. That means paying thousands but still being in danger of losing everything in a major wildfire. Homeownership, once considered retirement security, now feels like a gamble seniors cannot control. Insurance isn't the only expense spiraling. Fire zone properties attract extra taxes and local fees that homeowners never expected. Fire districts demand new funding to cover firefighting resources, equipment, and evacuation planning. Cities pass new hazard mitigation fees and special district charges. Even when seniors vote against these increases, they often pass anyway, and the bills show up whether they agree with the decision or not. Each one chips away at monthly budgets already stretched by rising food, gas, and healthcare costs. Some seniors have tried appealing these charges only to be told the fees are mandatory. There is no negotiation. There is no discount for retirees who have lived in the area for decades. When a tax or fee increase hits property owners, it is assumed everyone can simply pay it. For seniors, the choice becomes heartbreaking: keep their home but sacrifice other essentials, or sell and leave the community they thought they would never have to abandon. Water bills also spike for those in wildfire danger zones. As drought conditions intensify and water scarcity remains a constant threat, utilities add new charges for infrastructure upgrades needed to ensure emergency access during fires. That means higher base rates, new surcharges, and steep penalties for even modest outdoor water use. Retirees who maintain gardens or fruit trees worry that keeping their yard healthy could trigger costs they cannot afford. Meanwhile, those who rely on wells face costly inspections and equipment upgrades to ensure emergency reliability, yet there is no support to help cover those costs. Electricity bills tell a similar story. Power providers pass on wildfire prevention expenses directly to homeowners. Underground power line upgrades, utility equipment overhauls, vegetation management, and state-mandated safety programs all increase monthly charges. Seniors who live in older homes require more energy for heating or cooling and worry each month about how high the bill will go. They conserve as much as they can, turning off lights, avoiding air conditioning, minimizing use of appliances, but the base charges continue rising anyway. Even when seniors try to protect their homes by fireproofing, they are punished financially. Clearing brush, installing defensible space features, and adding fire-resistant materials cost thousands. And if they can't afford those upgrades? Insurance companies use that as another reason to cancel or raise premiums. Retirees who physically cannot perform heavy yard work must pay contractors, yet few can afford such large, ongoing expenses. They feel trapped by expectations they cannot meet. Local governments continue to introduce fire prevention ordinances requiring homeowners to make specific improvements. Steel roofs, ember-resistant vents, double-paned windows, smart sprinkler systems. Each one sounds reasonable until the costs pile up. Seniors who worked their entire lives to finally own a home outright now risk losing that asset because they cannot afford to comply with newly imposed standards. They fear failing an inspection and receiving a fine that makes their financial situation even worse. The emotional toll builds every day. Seniors once found peace in looking out their windows and seeing nature. Now they see risk. The trees they admired for decades are suddenly threats that could burn and take everything with them. Retirees used to relax during warm summers. Now they panic at the sight of smoke on the horizon or a red flag warning. Stress replaces comfort. Anxiety replaces joy. Homeownership becomes a fear-based responsibility instead of the reward it was supposed to be. Some consider selling before these financial pressures push them into losing their home entirely. But the real estate market punishes sellers in fire zones. Buyers hesitate to take on inflated insurance payments and uncertain future expenses. Appraisers are conservative because of fire risk. Seniors can be forced to sell at a loss or accept offers far below the home's true value. The savings they thought would carry them through retirement shrinks dramatically, leaving them vulnerable in their final years. Those who do sell often face another burden: relocation costs. Moving to another area requires new housing expenses, travel, and possibly new taxes they didn't plan for. Many seniors cannot afford to relocate near family because property prices in safer areas are even higher than the homes they sold. They fear being forced into rentals that cost more than their fixed income allows, or moving far away to unfamiliar states just to survive financially. Community support systems break down when longtime residents leave. Seniors lose neighbors they rely on. They lose the comfort of familiarity. They lose access to trusted doctors and local pharmacies. Every departure creates more isolation. Those who remain fear they could be next. The feeling of stability that once defined retirement is replaced with uncertainty that never fades. Families also feel the strain. Adult children worry as their parents struggle with rising costs and increased fire dangers. Many wish they could help financially but face their own challenges with California's high cost of living. Grandchildren may live too far away to offer support when emergencies happen. Seniors feel guilty burdening loved ones, even though none of this is their fault. State leaders continue to propose laws aimed at fire safety and disaster readiness. But every new policy seems to place the financial burden on homeowners, especially seniors who already spent decades contributing to the state's revenue through taxes and utility bills. They watch announcements filled with positive language while their actual expenses grow larger and more frightening. They ask themselves how much longer they can keep paying before something breaks. Some seniors consider dropping home insurance entirely and hoping nothing happens. But one wildfire or one ember landing on their roof could wipe out everything permanently. Losing a lifetime of investment so quickly is a risk too high to take. They feel stuck between two impossible choices: pay rising premiums or risk losing their home in a fire, the very disaster insurance was meant to protect against. This kind of stress affects health. High blood pressure rises. Sleep becomes difficult. Anxiety leads to physical pain. Seniors should be enjoying life, not staying up at night wondering whether they will still have a roof over their heads next year. Homeownership should never feel like a threat to personal well-being. Yet in fire zones, it does. Even emergency preparations cost money that many do not have. Evacuation plans require fuel, lodging, and supplies. Pets add more costs. Some seniors live alone and rely on neighbors, but what happens if those neighbors move away because they can no longer afford to stay? Suddenly, retirement is tied to fictional safety nets that collapse the moment a fire breaks out. Water shutoffs during fire events create new concerns. Seniors with health conditions need reliable access to hydration and sanitation. Losing clean water for even a day becomes dangerous. And rolling power outages intended to reduce fire risks leave those with medical equipment fearing for their safety. People dependent on oxygen machines or refrigerated medications worry they won't have the help they need when it matters most. The situation becomes even darker when considering property taxes. Even when housing markets weaken over fire risk, tax assessments don't drop as fast, or sometimes not at all. Seniors pay taxes on inflated values while the real market value decreases. That creates a financial imbalance that feels unfair and predatory. They ask why they are paying taxes on a home that insurance companies refuse to protect. Fixed incomes simply cannot stretch to cover endless fire-related surcharges. Rising costs turn retirement into a financial emergency. Seniors are calculating what they must sacrifice to stay one step ahead. Meals are simplified. Medical appointments are delayed. Leisure activities disappear. Life becomes survival instead of enjoyment. The weight of all this drives a painful question. How long can seniors remain in their homes before California pushes them out financially? A lifetime of responsibility should earn stability. Instead, homeowners in fire zones are punished for risk they did not create. They didn't choose wildfire danger. They didn't cause climate shifts. They didn't lobby for utility mismanagement or insurance companies leaving the state. Yet they are the ones paying the price. Many seniors now regret choosing their dream location. Not because they don't love the place, but because the state has made living there too expensive and fear-filled. They feel betrayed by a system they supported for decades. They feel ignored when they ask for help. They feel unheard when they warn that the situation is becoming impossible to manage. Retirement was meant to give seniors the chance to enjoy the home they worked so hard to keep. Instead, rising wildfire-related expenses are shrinking their savings, damaging their health, and trapping them in uncertainty. They face hard decisions they never imagined making so late in life. Some must sell and leave behind everything familiar. Others stay and spend every month worried that next year may be the year they lose control of their finances completely. These wildcard costs are not temporary. They rise year after year. They shift unpredictably. They strike at the heart of security, the home. Seniors deserve better than a retirement defined by fear of fire, fear of bills, fear of losing everything. They deserve support from the state they helped build. They deserve respect, not financial burden. And they deserve to feel safe in the place they call home. Until leaders take action that truly protects homeowners instead of punishing them, seniors will continue feeling targeted. They will continue losing faith in California's promises. And they will continue wondering whether the only solution to saving their retirement is packing up and leaving the state behind. No senior should have to choose between paying their insurance and putting food on the table. No senior should stare at a tax bill that forces them to consider selling the home they love. No senior should fear opening mail because it might bring another unexpected increase. Yet this is the reality for those living in California fire zones. The future remains uncertain. Fires will continue. Utility upgrades will continue. Inflation will continue. Costs will continue rising. The only question is how long seniors can endure this before they must make heartbreaking changes to survive. Their homes are more than property, they are the foundation of their identity. Losing that stability is losing a piece of themselves. Fear is becoming the new normal. Seniors deserve better than that.